Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, July 24th, 2019. We are again in the final hour of the trading day. As many of you know, I believe that the prices as close as you can get them to the end of the day, to the close of the market, are the most valid prices, and therefore those are the prices that I choose to use for my entry and exit decisions. So hope everyone's doing well. Thank you for coming out and spending time with me today. We're having kind of an interesting day in the market. The Dow Jones is actually down 104 points. The NASDAQ is actually up 51 points, and the S&P is up too. So it's kind of a mixed market. There were some big Dow components that were down today, and that's why you have the disparity. With some indexes being positive and some being negative. So anyway, let me just see if everybody can hear me okay. If you can, please let me know. We're having another green day today, and I am grateful for that. Always grateful to paint a little profit. So the plan for today, as usual, is first thing we're going to go ahead and we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to look at my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward, either to the upside or to the downside. Then we're going to spend a few minutes on some trader psychology, because as you know, I believe it's the most important part of your trading. You know, getting the technical setups down, so forth. You know, you need that, but really in the long run, it's going to be you and your emotions and your psychology that's going to dictate whether or not you're a profitable trader or not. So that's why I do like to spend a little time each day. Hopefully it will rub off on you. Hopefully you'll take it to heart and internalize these things, because I'm a huge, true believer in the power of psychology when it comes to trading and managing your emotions. Okay, so after that, we're going to come back. We're going to take a look through my watch list. We're going to go through each stock one by one. We're going to look at the technicals. We're going to look at support and resistance levels. We're going to look at moving averages. We're going to look at MACD and RSI and ATR channels. We're going to look for risk to reward ratios. So a bunch of stuff that we have to look at and calibrate to make sure that we're entering a trade that hopefully has an edge in our favor. You have to have an edge in each trade. Otherwise, it's just like flipping a coin, right? You have to have an edge like a casino. And in my opinion, those come from a combination of technical factors lining up at the same time. And then after that, after the market closes, if you have any questions at all, please don't be shy. Just put them into the chat, and I will do my best to answer them. And it doesn't have to be about something that we discussed today, although that's totally fine. But if you're having any issues, if something's happening over and over, some kind of cycle that you're having an issue with, and you probably know what they are. You know, if you have something like that you're dealing with, please let me know and let's talk about it and see maybe if we can take care of it so you can become a better trader. So, all right, well, that's the plan for today. And hey, Andy is here. Good to see you, Andy. Mount Doji, hey buddy, good to see you. Frank B is here. Yes, good to go. Thank you. Thank you, Frank. Good seeing you. Oh, and William is here. Hi, William. How you doing? Good to see you. Hope you're doing well. And Frederick. Good to see you. Frederick from France. Hi, Greg. Hi, everyone. Hey, buddy. Good to see you. All right. So let's get the legal disclaimer out of the way, and then we'll come back and we'll get down to business. Okay? So hang tight for about 40 seconds, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast.
The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Good. So, all right, well, let's just go down through each one of my positions. Let's talk about them. And the first one is CVS. I did buy CVS yesterday at the close. The reason that I bought it is because we had this big move up here. We've slowly dripped down. We've dripped down into the value zone. And as you know, I like to buy things in the value zone because you have the easiest movement from there. Once you start buying up here, it's hard to get things to go further than there. It happens, but not the majority of the time. So we're playing the odds. We want to do things that are in our favor. So again, we came back down. We came into the value zone. We stopped, we went up a little bit, we came down, so we do have some sidewards movement here. And then yesterday we had a V1 entry where the low of the bar, the entry bar, washed out the previous low, also washed out this previous low, which is also beneficial. And then we closed higher than the previous close, so giving us a V1 that happened inside the value zone. In addition to that, it also rejected the 20 moving average, it rejected the 5, and it rejected the 10 EMA moving average as well. So, I do like this. I do like the pattern. I really like buying it into value because now we have some, ease of movement. It is up today. Not a lot, but it is up. So going forward, where is going to be my stop on this? My stop is going to be the 20 EMA. If we get a close, not intraday, but if we get a close below the 20-day EMA, that will tell me that this trade was incorrect, and I will go ahead and just get on out. And what I like about the 20 is it also lines up nicely with the halfway mark of this bar, because if you take a big bar like this, it should hold some intrinsic value at the 50% mark. Should, doesn't always, but it's a reference point, right? So anyway, no profit targets on this today, but it is green, so I am grateful for that. And so going forward, as it continues to move up, I will just continue. I will continue to phase out if it hits my profit targets. I have this orange line up here. This is close to the third ATR, so this would be a warning point. It's also halfway of this down bar. So when you have a big down bar, the 50% of that down bar is going to add some resistance as well. And then of course the blue line up here is the 70 RSI. So if we make it up to here and it falters, that might be a reason for me to go ahead and just lock in the profits. If it continues to move up, if it closed above the 70, I would continue to hold it as well. But if it tested the 70, rejected it, closed under, that would be another reason for me to go ahead and lock in profits. So a lot of what ifs here, but you do have to have your if-and statements. If it goes down here, I will get out. If it goes up, I will phase out. If it rejects the third ATR channel with some kind of bad price action bar, I will get out. If it continues to go up to the 70 and close above, I will keep it. If it rejects it, I will get out. So it's important, everybody, to have if-then statements. If it does this, I'm going to do that. If it does that, I'm going to do this, right? You have to have a plan. And as I always say, it's easy to come up with your plan, but implementing it and actually executing it, that's a whole different thing. So that gets over to the psychology part. Okay, so that CVS is going our way so far. All right, Etsy. So, Etsy. I did buy this back on July 15th when we had the 1050 crossover. This is a good long-term approach, buy and hold approach, or trend trade approach for Etsy. Although, some people can trade it just mechanically. On stocks, I choose to trade these discretionarily. So I use the 1050 as my entry signal. The very next day, it went right back against us. I decided I didn't like the action. I just decided to get out. But then I re-entered the trade back here on this 18th of July when we had this V2 entry. Here is day 1, here is day 2, here is day 3. Day 2 washes out day 1, day 3 closes above day 1. That was my entry point. It wasn't the best V2, but it did happen right in the value zone, and it also happened just a few days after we have the cross. When you have a cross, a lot of times it will just continue up, but sometimes it will go right immediately against. But I have found in those situations that those are good places to buy. Now, it has to be recent. It has to be within basically the first pullback after the crossover. So I did buy it here, moved up the next day, took a profit target, moved up the next day, hit, I believe, 3 profit targets. Yesterday, it went up, reversed back underneath the high. It rejected the second ATR channel. It came down, closed lower than this previous high. So there were a few things here that I didn't like about it. So what I did was I went ahead and I just took off a half a position, the position that I had left. I basically scaled out of about 50%, so I had 50% left of the shares, and then I took half, so I have a quarter of the shares. So today, let me switch over to this other chart here.
Order filled.
Oh, we had some order fill. So today, this is the other chart. Here was this previous high that I was concerned about. That yesterday we went above, we closed back below. Today we try to poke our head above this again, and then close. It looks like right now we're going to close below. So if it does close back above, I'll continue to hold it. I'll continue to phase out to the upside. If it closes back below again with 2 days of testing this new high, testing this new range above this high, I'm just going to go ahead and lock in the whole profit on the trade. So this has been a really nice trade. Don't want to give it back. I'm looking at these red flags here. Went higher than this previous high, rejected. Went above the second ATR, rejected. Today went above the high, rejected. Went above the second ATR, rejected. So, definitely some red flags here. So I'm going to go ahead, and if it closes under 68.40, I'm just going to go ahead, lock in the whole profit. But that was a really, really, really nice profit. All right, IWM. So this is kind of an interesting trade here. Something, oh yeah, there we hit our profit target. Okay, so I bought this back on June 28th when we had the 1050 moving average crossover. This is a good long-term back-tested approach trading the Russell 2000, which is an IWM. Basically, if you trade this mechanically, you're going to stay in as long as the 10 is above the 50. You're going to stay in and phase out the way I do it, or that's how I do it, or your stop's going to be when the 10 closes back below the 50. So I did enter this as a mechanical approach. I'm just going to, trade this like a robot as long as the 10 is above the 50. However, when I bought this, I only bought 50% of my position. And the reason why, it was up here outside of the channel, it had had 2 strong days. So my idea was, okay, I'm going to buy this here. If it continues up, I'm going to phase out. I'll be happy with that. However, if it comes back into the value zone and creates a valid entry, I'll add my second half because I only took half to begin with. So I did buy it here. Next day we gapped up, took about 25% of the position off, which was nice. Then it's just move sideways, move sideways, move sideways. We hit some profit targets in here, took some chips off the table. We finally got smacked down into the middle of the value zone, so that now it starts to become interesting to me. This is a good example of moving up, coming down, sideways, sideways, sideways. We spiked down 2 days ago. Yesterday, we triggered a V2. So here's day 1, day 2, day 3, day 3. Day 2 washes out day 1, day 3 closes above day 1, triggering the entry. So I added the second half of my position today, and you can see that was a good move. It was a big move up today. We just hit 3 profit targets. So now we are net completely profitable on this trade. So that's one of the reasons why I like to buy half positions sometimes and then wait for a better entry to add the full position. So anyway, hope that makes sense, everybody. We did hit 3 profit targets. This is really nice. So essentially, I took off about 30% of my holdings, about 10% here, 10% here, and about 10% here. So going forward, how am I going to manage this trade? Again, this is a mechanical trade. I like mechanical trades because sometimes the market's wild, crazy, keeps moving up. So if that happens, I want to have at least a portion of my capital in a possible trade like that compared to just discretionary. So moving forward, I'm going to phase out until I run out of shares, or the 10 crosses back below the 50. That will be my stop. But even if it does, took some profits up here, took some chips off the table. All right, so that is IWM SPY. All right, so we had a losing trade on SPY today. I do buy the SPY each day at the close, and I sell it first thing in the morning, and I'll get to why I do that later. But we did buy yesterday. We bought right here at the close at 300.03, and it gapped down this morning. We got filled. So this is a bummer, right? Because we took a loss on the trade and then it reversed back higher. But that's just that's just how it goes. If you get upset at this kind of stuff, you're going to wear yourself out pretty quick. You have to play the long game on this kind of trade. So let me show you this. Apologies to everybody that hears this every day. I know it can get boring. It gets boring for me, trust me. But in case we have some new viewers, I want to give them some context about why I do this, because on first glance, it doesn't look like, it's very technical or a lot of thought put into it. So this is from Liz Ann Saunders at Bespoke Invest. So we buy at the close and sell the next morning. However, if you did the opposite and you bought the SPY at the open each day and you sold it at the close each day, from 1993, you would have returned a negative 13.9%. However, if you would have bought the SPY, done the opposite like I do, you buy at the close and then sell first thing in the morning since 1993, just that simple change. Instead of buying it in the morning, selling it in the afternoon, you buy it in the afternoon, sell it in the morning, you'd have returned 634.2%, meaning that more than all performance in the SPY since 1993 has actually come in the aftermarket and the pre-market. People bidding it up, selling it into the open of the market. So, you can see long-term, the blue line here, this is the buy in the afternoon, sell in the morning. The orange line here is the buy in the morning, sell in the afternoon. Huge difference. Very clear that there's an edge in holding overnight. This is one of the reasons why I think day traders do struggle, because you can see very clearly here the prices and the moves do not happen in the day, they happen overnight. So that is why I buy it each day at the close, sell it each day in the morning. It does, this is volatile, although the results are really great long term. So make sure if you use this approach, you use a small position size, something that you feel comfortable each day, because you might have a month, a week, a month, a year where this goes down, 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 down. So, don't think this is some holy grail, because it's not. It's just a good long-term approach that you have to be consistent with. So that being said, I will buy the SPY again today at the end of the market, but unfortunately we had a loss overnight, but we've had so many wins I've been doing this since February 22nd, so it's been very, very profitable. But I am aware, and I'm okay knowing that we may have a month or 2 or 3 where this just loses every day. It's possible, right? So you have to prepare yourself for that. All right. VIX. Well, VIX has been my only really bad trade over the last little while. It's okay. I mean, it's not okay, but it's okay in the fact that, I only took a quarter position. I didn't take a full position or half position. I only took a quarter position, and I based it off of, a valid signal. And the signal was we bought it back here on 7/17 when the previous day we went below the 30, closed back above the 30. We went under the third ATR channel, closed back above the third ATR channel. So we did buy it here. Next day we did phase out of a little bit, thank goodness. But it's just been dripping down and dripping down and dripping down and dripping down. Yesterday it did hold the 30 RSI. That was my stop. I wish it would have closed just under, obviously. But today it's 27.48, so I guess I will be saying goodbye to my VIX trade here. But it's okay. Not every trade wins. We all have to realize that. You know, if you're a really great trader, you might win 65-70% of the time, right? But that still means that you're going to lose 30 to 35% of the time. And I think most swing traders probably are in the 60 range as far as their wins. So 40% of all of their trades are going to be losses. So again, you really have to be okay with losses. In a weird way, you have to embrace them. Because if you're not okay with losses, how can you do this for years? Because you're going to have them all the time. So, try to get your mind right, everybody. Try to, get outside yourself. Repeat a mantra. I'm okay with losses. I'm okay with losses, because they're going to be part of life. And if you're not okay with them, it's going to beat you down. So anyway, VIX, if it does close below the 30, I will go ahead and just get out of this one. But this has been about our only stinker for the last couple weeks. All right, XLE. Let's get onto a profitable trade. So I did buy XLE back here on the 19th of July, and the reason why is we had this move up, we came back down into value, we tested the 50-day moving average, we had a V2, here's day 1, day 2, day 3, day 2 washed out day 1, day 3 closed above day 1, so this is a valid V2. I did not like that this was straight down. I like to see some sidewards movement before that happens, but the reason why I kind of overrode that was because this is a nice looking V2 just in itself. We rejected the 50, and the rejection bar also happened under the channel, and the entry happened in the channel. So V2 entry, rejected the 50, rejected the -1 ATR, closed back into the ATR channel. So that is why I went ahead and took this. I did take a half position, however, because we're under the 200-day. But you can see this has moved up nicely, 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 been phasing out the entire way. Did get one right here at the top today. So I did hit 2 profit targets today. So now the key is, how do we manage this? Well, so here we have a downward sloping 200-day moving average. Today we poked our head above. People did not like the prices up here. I'm going to go ahead and I'm just going to exit this trade today unless we close above the 200-day. This is a counter, a bit of a well, I guess I can't say a counter trend trade, but it was a pretty deep dip. If it moves back up above the 200 again tomorrow, maybe I'll re-enter it there. But right now, the price told me it did not like it up here, rejected it. This was a really nice trade already. So I'm going to go ahead and just lock this in unless we close above the 200-day moving average. Okay, last but not least, I do have one options trade on Johnson & Johnson. And when I sell options, I look for a price on 3 time frames that should have some support vis-a-vis a technical level. So on the monthly on Johnson & Johnson, I wrote this at 122. We have the third or the -1 ATR channel below it. Technically, there should be some support there. On the weekly, That $122 price lines up nicely, just smack dab at the third ATR channel, so I do like that. And then on the daily, I have to have that line up with something that looks decent to me, and that would be the $122 price lines up with the lows back in December during that horrible, horrible month. So anyway, it's been a good trade. It's definitely profitable. I've got about 50% of the premium here. Once I get to about 80% of the premium, if I get 80%, I'll go ahead and just get out of the trade, so I don't have to wait a whole nother 2 weeks. So we'll see what happens. All right, let me check on a couple things here. Okay. Hey, Johnny's here. Good to see you, Johnny. Thanks for coming. Dr. Jorgensen, CVS, legal drugs this time. That's right. Good to see you, Bruce. Etsy, look at the MACD volume down today, running out of momentum. Well, looks like very likely we are going to, well, the momentum's still strong, but unless it closes under the 68.40, I'm going to go ahead and get out. SPY, must have been why I didn't sleep well. XLE, didn't like the 200. Maybe tomorrow if it can get through. Murat, hey, buddy. Good to see you, Murat. Thanks for coming, my friend. Hope things are well in Norway. All right. So Stephen Burns, who's a friend of the channel and somebody that you should follow on Twitter at @SJosephBurns, he has such good information. I would really, really suggest that you follow him. Go to his website, newtraderu.com, read all the articles. But, you know, this really did speak to me because this is just a simple 5-point bullet point comments made here on a piece of paper. But, you know, this is worth a lot of money to you. If only you read these, internalize these, and live by these. But, you know, here are 5 trading rules. 1, trade to trade well, not to make money. And, you know, I know people have a kind of a difficult time getting their head around this, but there is a difference between going, hey, I got to make money, I got to make money, I got to make money, or putting yourself, you know, in the mind space of, I'm not going to think about money. I'm going to create a plan. I'm going to trade it well. I'm going to enjoy the process. I'm going to try not to make any mistakes. I'm going to follow my plan to the T. And that is trading to trade well, not make money. And if you trade to trade well, if your goal is, hey, I'm going to take a process here, I'm going to follow it exactly, the money will follow. I've told so many people this. I don't think they believe me. But if you're focusing on the money, it's hard to make the money. If you focus on the process and your plan without thinking about the money will come. I'm telling you. Number 2, fiercely protect capital. Listen, your job as a trader, everybody, your number 1 job is to protect the capital, not to make money, to protect your capital. You're a risk manager. Think of yourself as a risk manager. And I think if you do that, you're going to pay more attention to, there's a loss, got to get this thing out of here, right? So number 2, fiercely protect capital. Number 3, act immediately without hesitation on qualified setups. Okay, you know, some people have good setups, but they're scared to take them. You know, I'm scared of the market, but I'm not scared enough not to take my positions, and that's the difference. But you do have to act immediately. Some people just, you know, get deer in the headlights. They won't actually take the trade. I've never had that issue. Some people really do have that issue. Most people trade too much, but you know, this is important also. Act immediately without hesitation on qualified setups. Number 4, the only thing worse than being wrong is staying wrong. You're going to be wrong a lot. You're going to be wrong a ton. Like I mentioned earlier, just get used to it. It's fine. Totally normal. Doesn't mean you're a bad trader. It just happens. But the one thing that is bad and is worse than being wrong is staying wrong. And that's when your ego takes over. You're like, no, it shouldn't be down here, or it's low enough. What does that mean? You know what I mean? The market's telling you you're wrong. So you're going to be wrong. Be okay with that, but don't stay wrong. And number 5, if confused, see real 2. Fiercely protect capital. Mantra of the day. You need to fiercely protect your capital at all times, everybody. Please, please, please. So trade to trade well, not to make money. Fiercely protect your capital. Act immediately without hesitation on qualified setups. The only thing worse than being wrong is staying wrong, and if confused, see Rule 2. Rule 2. All right, makes sense? All right. I need to cancel something here.
Autofilled.
All right. So that's that. Thank you, Steve Burns. Okay. All right. Well, I'll tell you what. Let's get on now and take a look and see if there's any possible setups for today. By the way, earnings day today. After the close, Facebook, Tesla, Ford, PayPal, the ones that I recognize, Sands, of course, but this will be a big earnings after the market. So, let's keep that in mind. These tech companies are going to have an effect on possibly anything we buy today. So let's keep that in mind. All right, Apple. Apple has had a huge reversal here, no doubt about it. It was down about $1.60 earlier. As you know, guys, it's just too high up here for me to buy. Not that I don't think it's going to go higher. It's just that it's not. I don't have a good place to enter the trade, a good context to give me a good return, risk to reward ratio. So nothing on Apple today. Silver. Whoo, made another high here today. Look at that. Made a high from this big move. So up 2.5%. Interesting that metals are so in demand right now. So obviously nothing to buy here. We did buy this back here on a moving average crossover, a 520 EMA moving average crossover. You can see this, a very simple trade, mechanical trade, like a robot. Stay in it as long as it's above, get out when it's below. You're going to have to take a lot of losses this way, but every once in a while you're going to get a monster that's going to pay for all your little losses and more. And you can see we scaled out of this trade all the way. We entered here, we scaled out all the way up to here. Actually, I just ran out of shares up here, so that's the reason that I got out of this trade. So nothing on silver today. Advanced micro devices, we had this move, came back down into the value zone a little bit, not deep enough. I would have had looked for a V1, V2. Remember, when you have these up moves, every up move comes with a little dip, right? And the old saying, buy the dips in an uptrend. And that's when you're looking for V1s, V2s, it's exactly what's happening. You're just looking for a dip in an uptrend into the value zone, and then looking for a V1, V2 trigger to get you in. But nothing there. Amazon, look at this, guys. It was way down earlier yesterday. We have Amazon earnings tomorrow. We are in the value zone down here. This was a V1 right here, but I don't like to take them outside of the value zone. So we have earnings, so I'm just going to have to step aside here. Who knows? This might go rocketing up, might go rocketing down. I have no idea, but nothing on Amazon today. Boeing. Well. So, this is one of the reasons why the Dow is down today. We had earnings. Most of the day it was holding at the 200-day moving average. It looks like now it's dropped below. So do I want to get involved with this? No, I don't. There's huge bars here. A lot of supply coming into the market, so it's going to make it difficult to go back up. So nothing on Boeing at the moment. Alibaba had a strong day yesterday. It's a 65.63 RSI. It's just too high from an RSI standpoint and also from an ATR channel standpoint. It is closing above that previous high, so that is positive, but there's really nothing for the way I trade on Alibaba. Caterpillar had I guess they missed earnings, because look at this huge gap down, but look at this huge reversal. But this is a monster bar. It did reject the 200, which is positive, but I just don't want to get involved with Caterpillar here at all. Here is the DDM. This is the double leverage Dow Jones Industrial. We did get up above the third ATR channel. It was a little too high, and now it's underneath the third ATR channel, but it's purgatory right here. It's too high to buy. Again, like a broken record, sorry, but I need this back in the value zone in order to get another entry. You know, it's important that when you enter a trade, any trade, you have a well-defined risk to reward ratio. And this was a trade we took back on the 6th of June. We went under the 200-day. We closed back over the 200-day, giving me a very small loss if I was wrong, giving me a potential nice move if I was right. This was a mechanical trade, so no I'm not looking for red flags. I'm just staying in as long as it's above the 200, getting out under. But this was a nice trade. We phased out all the way up to here, but we need a reset on the Dow. Walt Disney, I do like what it's doing here. I mean, you know, we have this strong move up. We move back down. There was some profit taking. See the consolidation that's going on here? See the sidewards movement? This is exactly what I want to see. But, you know, we're in the zone. That's phase one. We have a setup. We have this consolidation, move sidewards. That's good too. All we need now is a trigger to trigger us into the trade. So tomorrow, you know, let's say we stab down, reverse back up. That would be my trigger. So, you know, what I'm looking for here is what we had here. We were moving sideways. We had a day 1, day 2, day 3, day 2 washed out day 1, also washed out the -1 ATR channel, triggered. So this was our entry. This is our sweet spot, and we had this beautiful trade all the way up to here, and we scaled out to here, and we were done with it. Etsy, we talked about that one. We bought this on this V2 in the value zone. MACD was over 50. You can see this was a really, really nice trade. Did get out of half of it yesterday, and if we close below 68.40 today, I'm going to go ahead and just lock in that trade. But that was a beautiful trade. Facebook, look at this. Look at this. Look at this gap down and this huge reversal back up. Technically, it's a V1, right? This certainly washed out this bar, closed above, but it's too high. Plus, we have earnings this afternoon. 5 below, just been hanging around at that 200-day. Nothing there. Gold. You know, we had this nice move up. It has pulled back into the value zone. I just needed to go sideways for a while and look for another V1, V2 entry. Back here, similar to silver, we did buy when gold was in the value zone, took out this previous fractal, and also had a 520 EMA cross. And so, you know, all the boxes were checked for us to take a trade, and this was a great trade. We scaled out all the way up to here, but nothing on gold today. Google, back in the value zone, gap down, has recovered, but nothing here. We do have earnings tomorrow, so nothing on Google. Goldman Sachs, boy, that has been strong. That has been strong. You know, I didn't buy anything up here because we were too high, but it goes to show you, just because it's high and it's a third ATR channel, it does not mean it can't go higher. Probably chances are it is going to go higher in a strange way, but it just doesn't give you a good risk to reward. So here we are at 73.81 RSI, which is very, you know, that's very, very strong. It's parabolic move, close above the 70, but I need a pullback on this. There's just nothing I can do. The risk to reward is not good. We took this trade back here on the 27th when we just poked our head above the 200. If we were wrong small, right? So this is an example of a good risk to reward ratio compared to up here, right? So you can see this was a nice trade. It was a nice 3-day trade. We phased out and exited the position up here. IBB, that is a little interesting, actually. See the nice V1 we have here? This was not like this earlier in the day, but now we have a nice V1 that happens in the channel, also rejected the 50-day moving average. That's not bad. Let me mark that one. It's under the 200-day, so it would be a half position. So let me just hurry and do the math on this. I was waiting for a crossover trade. However, this one is more recent. This doesn't look bad. I mean, you know, see this sidewards movement, right? And this big washout, big reversal, and you know it does. I mean, it's a beautiful V1 that washes out the 50 at the same time, and also looks like it's going to close. So this one is definitely going to be a possibility for the end of the day. Intel. Just going to the moon. It's just too high. There's nothing I can buy there. IWM, of course, we have that one. We did hit that profit target, that third profit target. What a monster trade this one was, huh? That we bought yesterday. Yeah. But we were patient. We waited for the V1, V2. We know that we had the 1050 crossover in the recent past. We had the sidewards movement. We reversed back up. So this has been obviously a beautiful trade today. Johnson & Johnson is what I have the puts on. We talked about that. Coca-Cola had that big move up on earnings. We've come back down now. No surprise to me that we are holding about the halfway of this bar. You can see the volume today, even though we're down, is lower. That is a good sign. What that means is that there's not a lot of distribution going on at this point. Maybe just some people taking some profits. So nothing on Coke, but did want to point that out, that it is holding the halfway mark. Lockheed Martin, look at this. We had earnings yesterday. It gapped up, went back way down, decided it wanted to come back up and take today a huge move up. It's too big of a move here. It's right at the channel. Nothing interesting here. Just want to, you know, I want a better setup without the big bars. And just like here, you know, we had this nice V2 here. We moved up, we moved down slowly, we moved sideways. We V1, excuse me. We triggered the V1 and we phased out all the way to there. MasterCard has just been going and going and going. Has earnings next week. It's too high here. We did enter here when we made this move up. We came back down into the value zone, triggered this nice V2. Moved up nicely for us. We got rid of about 50% here. Next day it puked back down to about our entry point, but it was a still nice profitable trade. Came right back into the value zone. That's where I wanted to look for it again, but I just didn't get a trigger. And sometimes it happens. It will happen more often than not that it will come down. You're like, oh, it's in the zone. I want to buy it, but you don't get a trigger, and that's just how it goes. So just be okay with it. You'll find another trade. Merck. You know, we made this lower low. We rallied to the 50. We rejected the 50. We did trigger a V1 yesterday. I didn't take it. What I said was I'd like to see it take out this fractal before I get interested in Merck. So this is on my radar because if we trigger the fractal, it will be right in the value zone. That's where I like it, but nothing on Merck today. Microsoft, we had that big move down and then up, 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 up. Still hasn't broken out of the high of that. It's getting a little high here. I don't have anything in this, but I certainly wouldn't buy here today. Netflix, look at that, everybody. So, you know, we did go under 30, back over 30. That is good. You know, you certainly could take a position here using a close below the 30 as your stop of the day. I'm not going to buy it. My feeling is that with this huge down move, any of these rallies are going to be sold into. We still have the 5 above us, but just to give you an example, this is technically, you know, valid because we were under 30 back over 30, but I'm just going to pass on this trade, but we'll have to see. Nike does look good. We moved up. We're in the value zone. We did technically trigger a V2 yesterday. This bar was a little bit too big. You know, not bad here today. I'm just going to pass on this. Mainly because this bar is too big here, and obviously it wouldn't have been a good trade anyway. So we'll see. You know, maybe washing out this bar at the same time it washes out the -1 ATR channel and then has a V2, that would be more ideal. Or today, you know, here we have this high today. We made a higher high. Now in reversing, that is negative, but if tomorrow we take out that previous high, that turns that negative into a positive and would confirm this triangle. So that's also a potential. Philip Morris had that big move up. It sold off ever since. You can see the sell-off has come on lower and lower and lower volume, which will make me interested in this, especially if we can get back here to the previous highs, maybe here to the 20. That would be a pretty sweet spot to look. PayPal is up today. We have earnings after the bell, so there's really nothing I can buy here. Again, I wanted to come back into the value zone like this previous trade back here where we had this V2. Day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1, and we phased all the way out up to here. The Qs, 66.99 is just a little high. So nothing on the Qs. I need a better setup like we had back here. Close under, close back over the 200. If I'm wrong small. If I'm right big, like happened on this trade. Snapchat, look at that, everybody. Huge day, 17% day because of earnings. But it could have gone the other way, so, you know, keep that in mind. The SPY, we're going to buy that at the end of the day. We did have that loss this morning. Square triggered a V1 yesterday, but it happened outside of the channel, so it's just, again, it's just too high. Here's a good example of a huge combination of trades, or of signals. Here's a low, deep MACD, rally, lower low, shallow MACD, V2 entry, false breakout to the downside of this range, close back up in the value zone. This, you know, if I could have this trade every day, it would be awesome. But you can see this was a brilliant trade that we had, 14%. I think it was the biggest trade of the year. SSO, nothing. Treasury bonds, just nothing there. Tesla has earnings today. Be interesting to see what happens with that. Twitter, big day earnings. Natural gas, no. UNH, you know, we did go underneath the 200 earlier today. We were above the 200. Technically, if you wanted to, you could buy there because you're buying very, very close to your stop. If you're wrong very small. If you're right, you have more upside. I'm gonna pass on this. You know, although, you know, this just as an example here, however, this is something where you could buy if it closed above the 200, and if you're just wrong, you're wrong really small. But I'm going to pass on UNH. USO, nothing there. Power shares, nothing there. VIX 27.57, so under the 30 I'm going to have to get out. Verizon, well, you know, here you go. This looks like it is closing above the 200-day moving average. We did have this nice rally behind it yesterday. I'm not going to buy this. I don't like this move back down and this huge move back up before the trade. But, you know, technically you could buy this just with any close below the 200, but I'm going to pass. Energy Select, I am going to get out of that at the end of the day because it is looking like it's going to reject. So let me go ahead and just put in the order to sell this at the close. And over here, all right, so that's order in. This was a nice trade. It did reject the 200, so I'm just going to call it, lock in the profits on that. Financials, big day up, too high. Real estate did recover the 50-day moving average, but I don't like this big old bar here, so nothing there. Utilities, well, this is interesting. We did reject the 50. We may trigger a V1 here today. I like that we rejected the 50. We rejected the -1 ATR channel. Okay, we'll watch that one. Healthcare, nothing there. Pharmaceuticals is interesting here too, guys. We did have that V2 that happened yesterday. We did bounce off the third ATR channel. Today we have a bullish engulfing bar. We finally closed back above the 5-day moving average. We haven't been above that 5-day since back here. So this is interesting. The only issue I have though is that you're at a 45 RSI and very likely you're going to run into some resistance at the 50 RSI above you. So the proper place for your stop here would probably be halfway of this bar, because this is the washout bar on the V1. So even there, I don't think it gives you good risk to reward, although it is positive. I mean, look at the volume. I think I'm going to pass on this. I'm going to see tomorrow if I can get a little better price on this. But, I don't have any issue with this trade other than just my nervous system telling me that the 50 RSI up here doesn't give me a good risk to reward. All right, and then oops. I did go through the S&P 100 also before the podcast. So, technically if Boeing closed above the 200, you could buy it. I'm going to pass. Berkshire Hathaway, nice break above the 200. So, that is potential, with the close back under the 200 as your initial stop. Let me just do some math on this. Okay. IBB, I kind of like that. Oracle is interesting here. We moved up, we moved down, we moved sideways. We did have a V1 today. It looks like we're going to close above all the moving averages. So that one looks pretty good too. Okay, I'm going to let that one go, and I think I'm going to have to let XPH go also. But that is a nice bullish engulfing candle for sure. A lot of volume. But I'm just concerned about the 50 RSI above. So that leaves the potential to a Berkshire Hathaway. IBB. Problem is with IBB though here is that you're at a 46.73, but I do like how it washed this out. Let's take a look at the weekly. Weekly so far has triggered a V1, although not a great one, but it is in the value zone. Okay, so I think it's one hell of a V1. It's a big washout of the 50. All right, I'm going to buy a half position on IBB today. Then the other question here is on Berkshire Hathaway. That's 45 though, compared to Oracle. I like Oracle better. It's in the value zone, so I'm going to get rid of I'm going to get rid of Berkshire, and we're down to IBB, and we're down to Oracle. All right. So let me go ahead and just put in my orders here. So give me a second. All right, so XLE, we're taking profits on. SPY, I'm sorry, not SPY, but VIX, we're going to take the loss on that. We are selling Etsy. All right, so IBB. Buying a half position. Market on close.
Order cancelled.
Oh, that one won't let me. All right.
Order filled.
All right. Another another half position on IBB.
Order partially filled.
105.64.
Order filled.
All right. Okay, 105.64, and then Oracle. Okay, so this will be a full position on Oracle.
Order cancelled.
Gosh dang it, that wouldn't let me. All right, we'll do it this way then.
Order partially filled.
Okay,
Order filled. Order partially filled.
all right.
Order filled.
58.16 was our price. Okay, so there's our new entry. CVS, we are holding, that is fine. Etsy is going to sell at the end of the day because it did not close back above that previous high, so this was a great trade on Etsy. IWM, good. SPY, buying at the end of the day. VIX, gonna have to say goodbye to VIX. That was the stinker trade, but that's how it goes. All right. XLE, I am exiting that. That was a really nice 3-day trade with the rejection of the 200-day. We did enter IBB here, 105.64, and Oracle here at 58.16. So that's that. But is a green day. I'm grateful for that. We have 1 minute left. And then we should have some fireworks after the bell with the tech earnings. So listen, if you guys have any questions for me, please let me know. Type them in the chat. Just as soon as the markets close, I will get to those. What do we have? We have about 30 seconds.
Order filled. Order cancelled.
Okay.
Order filled.
All right. So we stayed in CVS. That is good. Etsy, we did get out of. Thank you, Etsy. That was a really great trade. Thank you, thank you, thank you. So we'll free up some room. IWM, look at that. What a monster. Boy, I'm glad we bought that V2. SPY, we did re-enter our SPY today at 301.44. Right up there. Hoy vey, that's high place to buy. But that's the plan. VIX, had to get out of VIX. That was a stinker, but thank goodness it was only a quarter position. So that one's gone. XLE, that was a nice trade. It rejected the 200, so we got out of that. You know, when you guys are in your trade, you're not quite sure where to go. Looking at moving averages above you, major moving averages above you that fail, that, you know, that's a red flag. We did enter IBB because of this nice V1 back above the 50, back into the channel. My close, my stop on this will be a halfway of this bar. Now you could use a close below the 50 if you wanted to be a little bit tighter with it, but the correct way
Order cancelled.
with V1s and V2s is a halfway of the washout bar. So right here, because this big bar should hold some support here. So we'll see what happens with this, but it does give us a small loss if we're wrong and a potential for a large win if we are right. And what else do we have? Oh, Oracle. Here's a nice trade that Dr. Jorgensen had on 3M. What a beauty, huh? But did go ahead and get him out today because earnings are tomorrow morning, so don't want to risk that nice profit on a bad earnings the next morning. So all right, well that is it. So listen, before we get to before we get to the answer section, let me just put in a quick plug. Let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. So I really like to trade. I've had some really great success with my clients. I've turned them from losing traders into winning traders. You know, you guys listen to me each day. You see me go through the charts, which is good, definitely good. But obviously, you know, one-on-one lessons are better because you can answer questions in real time. And probably the most important is that I turn the tables and I ask you questions. I try to throw curveballs at you and to see if you can give me the right answers. And once I know you have the right answers, then I know you have it. A lot of times I work with people, you know, like here on the live stream, where it seems like they understand everything, but then when they start to work with me and I start to throw questions at them, I understand that they don't really understand it. So that's one of the benefits. So if that's of interest to you, you know, you've been thinking about it, my hourly rates are in the description of this video and my email's in the description. You can just send me an email there or on Twitter. It starts out just with a free phone call just to see if, you know, you and I are a right fit as far as lessons. But I just want to know more about you, about your trading, about how you approach the market, what your goals are, what your challenges are, and then I'll put together a custom lesson plan to help you hopefully achieve those goals. And then secondly, you know, if you like this channel and you haven't subscribed, please do me a favor and hit the subscription button. And then also, you know, if you like today's information, please hit the thumbs up button. It helps Google promote the channel, helps the channel grow, and there's a lot of people out there that need it. If they listen to this channel every day, I know it would improve their trading. So, you know, help me help them, and you know, share this on social media, or you talk to your trading friends about it, or, you know, at least hit the thumbs up button. So all right, so let's get to the questions. Murat says, but the bars are large in weight, Disney, don't you agree? Bars are large in Disney. Okay, so Murat, here we come up, we move into the value zone, right? Now, we haven't triggered a V1 or a V2, but we are moving sideways. Regardless of the size of the bars, we are moving sideways. That's important. If we had a V1 tomorrow, it would be fine because this bar is less than one ATR channel. Do you see what I mean? But it does check the box as far as coming into the value zone. It does check the box as far as going sideways. It is going sideways. Doesn't matter the size of the bars, but it is going sideways. The only time the size of the bar comes into play is when you're trying to take a V1 or V2 up against it. So hope that makes sense. Murat says, can you look at GS in the weekly? Yes. Well, whenever you start seeing the prices getting up to the third ATR channel on the weekly, that's even a bigger move. You know what I mean? It's even a bigger move. So, I mean, I'm not saying the run's over. I'm not saying that at all. But odds wise, when you start getting up here, remember, prices tend to spend 90% under the third ATR channel and above the third ATR channel. Sometimes they get above and they run, no doubt about it, but majority of time they stay in here. So when you start getting up here, that's probably where you want to start taking profits. If you start getting down here and have a signal, that's where you probably want to think about going long. Murat says maybe it is still in value zone. No, it's definitely not in the value zone on the weekly. On the monthly it is. You know, if you want to trade monthly bars, this does look good. I mean, this is positive on a monthly bar. We took out this fractal, but you know, monthly bars move really, really slow, but this does look good on a monthly bar. It is in the value on the monthly. Dr. Jorgensen says, have a good hike. The white ball calls. Yep, Bruce is going out playing some golf. Have a good round, Bruce, and thanks. I will have a good hike. Dr. Jorgensen, the market isn't frustrating enough now to golf. Yeah, the two most frustrating endeavors. JT, hey buddy, how you doing? Thanks for coming by. Your thoughts on LEVI and the gap between 19 and 20? Okay. Well, this is the gap you're talking about. You know, the thing about gaps is they tend to get filled. They create a vacuum. And in general, the universe does not like a vacuum. So a lot of times when you see gap after gap, a lot of times those eventually will get filled. You know, when and how long, I have no idea. You know, the low of the gap or the high of the gap down day is exactly where we found resistance, which does not surprise me. It's a 41.27 RSI. We finally did break above the 5-day moving average, kind of like we did on the pharmaceutical chart we were looking at. You know, we did test the third ATR channel. This was the first big move back kind of in the normal third and negative third ATR channel. It's a 41 RSI. It would concern me to go long here just because, again, you know, we're probably going to have, let's see where the 50 RSI is going to line up on tomorrow. Right about there, roughly. You know, it seems like it'd be kind of a 1-to-1 risk to reward ratio. You do have the 10, you do have the -1, you do have the 20 EMA as potential upside resistance here. Yeah, I mean, I wouldn't take this, but if we can fill the gap, that will be positive, JT. I hope that helps. I don't know if that's what you were looking for, but you know, it is nice that we moved down. We've just moved sideways. We had this big strong day up today, but I feel like it's a little chasing here. Now, Doji says, would like to see your thoughts on CRM and Roku. Okay. Oops. Well, I mean, it's a nice V2 today. It's a nice big strong bar up there. But, you know, the way I trade Mount Doji is I probably would not take this here because it's outside of the 1 and the -1 ATR channel, and you do have this overhead resistance here. You know, if it triggered a fractal, that might be a little better, but right here as is, I mean, I'm not saying it's not going to go up, but just the setup, the parameters for my trade really don't fit here. It doesn't offer me a good risk to reward. And let's see, what was the other one? Roku. Well, it's not a V1 or a V2. We had this V1 that immediately reversed and validated this this fake out, this red triangle to the downside. We did rally, but just about halfway. It's over the channel. Yeah, I don't think I would be doing anything with Roku here. Frederick says, in the new book, New Trader, Rich Trader by Steve Byrne, they say it's better to have a trailing stop than a price target. What do you think? Just depends on your personality, Frederick. Honestly, I don't think one's better than the other. I like to have for me to phase out, in order to do the math, I always have to have a price target. My ultimate price target for me, just as a general rule, is the 6th ATR channel, because it's very rare that does it go above there. You really have to do some thinking about your personality, and it's easy to say, okay, hey, I'm just going to use a trailing stop. Easy to say that. But you have to find out what happens in reality. Can you do that, right? And just for trading 24 years, I have just found out about myself that I like to phase out. Therefore, I have to have a profit target. I can't phase out without a profit target. But if you can just take the trade and just ride it and ride it and ride it until you get taken out to the downside, if your personality allows for that, then that's fine too. There's really no right answers, guys, as far as how to manage your trades to the upside. You can be as artistic as you want and fit it exactly to your personality. Sometimes one method's going to work better for a while. Sometimes another method's going to work better for a while, but it's probably going to average itself out in the end. So, you can be open-minded about trailing or taking profit targets or not taking profit targets. But the one thing you have to draw that line in the sand, and it's non-negotiable, is getting rid of those losers if you get losses quickly. So think about that. Think about if you really can stay in a trade and just wait for you to be taken out from the downside instead of the upside. I like to play offense and defense. I like to get out when it goes up a little bit, and I also like to trail defensively underneath me. Murray, Frederick C., that was what Nicholas Darvis wrote in his book as well. Yep, that's right. Good book with Nicholas Darvis. Johnny says, I often sell on big moves up. What would you qualify as a big move? I am using Keltner channels for 13 days and 3 ATR, so I sold a few semiconductors today. Well, Johnny, of course, I phase out, right? So I'm with you on that. Whenever you have big moves up, I like to take some. I think it's very important. I think Marty Schwartz in Market Wizard says, I always take profits as the market gives them to me. And that did make sense and resonate with me. So that's why I do that. But, you don't have to sell all of it, Johnny, but, taking some off. If you have a huge, big, like climax, big bar, like you did on Coca-Cola, yeah, of course, I would never let that go without taking some. So you're using the 13 days for the Keltner channels. I actually use 20 at the 3 ATR. But yeah, taking profits up at the third ATR channel, I don't think is ever a bad idea. So I'm glad you took some profits. Murray, he had this price box moving his trailing stop up. That's right. So you're just talking about, his price boxes were ranges, and then he would move up when they broke out of a range. Let me show you Etsy. So, like here's a box, then it moved up outside of the box, but see how it came back down into the box? That's what concerned me. Darvis would have kept it as long as it stayed above this box, but I believe when it came back down into the box or into the range, see, this is just a new range. It came back down into the range, he would sell. Mount Doji says, I don't know why I said Roku. I meant Zanga. Okay. Well, you've certainly got some sideways movement here. You made a high, you're coming into the value zone, but there's no V1 or V2. So, out of the three things we need to qualify, is it back? Did it make a higher high? Yes. Is it back in the value zone? Yes. Is it moving sideways? Well, not really. So, I would like to see this move sideways and have a really nice V1, V2 like here. This was good. This was legitimate. Didn't really work out. Would have been a small loss, but this is an example of a really good V1, V2. I would ideally like to see it come down here, wash out that bar, and have a V1 or V2 down into here. Murat, I think trailing stops fit better if you're a trend follower. Yeah, I agree. If you have the personality to be a trend follower, somebody could give me the best long-term trend following system ever. It could be the best, but I wouldn't use it because my personality doesn't want to hold on to things that long. So you really have to do some soul searching, and I guess you'll find out through trading whether or not that type of approach is a good fit for you. Yep. No rules. It literally depends on you. Crone has an interesting day for me. Yeah, Crone was a position yesterday that Mount Doji pointed out, and he was nice enough to share it with everybody before the close. Oh, wait, he didn't. Just kidding, buddy. So this is such a good setup, guys, that Mount Doji found. Look what we have here. We have this beautiful V2, day 1, day 2, day 3, closes above day 1. That's a beautiful V2 that closed in the value zone. It also, on the rejection day, on the washout day, it also rejected under the 200, back over the 200. That's awesome, right? It's a higher low. Here's the lower low one. Here's the higher low. It's always better to buy a higher low trigger. So we have a higher low break back above the 200 with the V2. MACD went positive. And you're over 50 RSI. You guys should print this out, frame this on your wall, and look for this setup. Does it mean if you take this particular setup 100 times that you're going to make money 100 times? No way. But you may make money 60, 65, 70% of the time, right? It's just an odds game. So, casinos win in Las Vegas by winning 51 where the player loses 40, or winning 51 when the player loses 49, and they make a lot of money. So I would say that taking this particular setup, everyone, you would have way more advantage than the casinos have over the players with this kind of setup. Did you take any profits on this today, Mount Doji? All right, Murat, I do trail stops, but I always have a target price. I sell 60% for sure once the target is reached. Perfect. There's no right answer on this. Again, the only right answer, guys, just get the hell out when you're wrong. Make those losses small. Come up with whatever you want on the upside. There's no right answer. Johnny says, I have small positions, that's why I sell all. Gotcha. Yeah, if you have small positions, depending on who your broker is, those scaling out can add up with extra cost. That's fine. Don't have to phase out. You can just buy once, sell once. Do you need to set up exit rule before entering the trade, or can you do it during the trade? Do you mean set up as far as like putting your stop actually in the system, Frederick? I think that's what you mean, or maybe what you mean, do you know where you're going to get exit before you enter the trade? That, of course, you have to do that. You always have to know where you're going to get out before you get in, but I have a feeling you're talking about actually putting the order in. I don't put the orders in. I just watch them manually. I don't have a hard stop in. I don't have one in the system because I trade end of day. It kind of defeats the purpose because it could go down and hit that stop. But again, I make my decisions at the end of the day, so I just have to watch them in real time. and base them specifically because I'm an end of day trader. Frederick says, what do you recommend? Well, if it's regarding the last question, I would not put them in. I would just watch them because you have to base it off the end of the day. Murray, yes, I need to see what the geometry says by looking at the chart, but I follow the trend as much as possible. Good. Never going to go wrong following the trend. I didn't notice until last minute, I swear. Yep, I know, man. That's what they all say. Just kidding, bud. I hit a profit target when I got close to the ATR. You know, I have a lot of people ask me about phasing out this and that. My method's a bit more involved. But if you buy in the value zone, everybody, and this is how I was taught by Kerry Lavorne, who taught me the V1s, V2s, and the ATR channels. When Kerry buys in the 180, you know, he will not buy over or under. He buys, you know, in the value zone. But once it gets to the 1 ATR, he'll take a third of his position off. Once he gets to the second ATR, he'll take another third of position off. And if he gets to the third ATR channel, then he can sell his last third ATR, or he can just trail it with the moving average. I think most of the time he just takes a third off here, a third off here, a third off here. And why does he do that? Because he knows that the majority of prices are going to fail here. So that is why he takes the third. But he also knows prices are going to fail at the 1 ATR because that's one standard deviation away from the mean. So that is going to have some issue there. Here at the second ATR, Marty Schwartz, I think 82% of all prices stay within the 2 and the -2. So that's why he takes the majority of his trades off here. So, you know, taking a third at the 1, taking a third at the 2, taking a third at the 3 is pretty easy to do. And it gives you some good guidelines. So I hope that helps. Okay. Hey, Frederick sent me some charts and he wanted me to go over them. I do want to show everybody. So it looks like he bought this today. This is Metropole TV. He bought this on a V1. He put here buy today V1, but close below 200 SMA just a few minutes before the end of the day. Divergence MACD RSI over 30. I don't see the divergence on the MACD that you're talking about. This looks pretty deep on the MACD bars to the downside. You see here we have a low, they're this deep. Now we're lower, they're this deep. So this is not a MACD divergence, this is a MACD convergence. Now I understand it went under the 30, back over the 30. So, you know, that's fine, that's legitimate. I don't see a lot of other compelling things going on here. The key here on this trade, if it were me, is, you know, if it closed back under the 30, get out for a small loss. If it closes above the 200, I would probably move my trailing stop not to a close below 30, but a close below the 200. So this one, I don't like that much, actually, honestly, Frederick, but, you know, good job in pointing out that you did look for the under 30 back over 30. But let me know how this one goes. So here's a trade he took on the 23rd, V2. Yeah, this one looks totally fine. Here's your washout day. This is the washout day of your V2, day 1, day 2, day 3, day 2, washes out day 1, day 3. That's why you bought. I understand that. It's over a 50 RSI. Here's your washout bar. So if it closes under halfway of this and that lines up with the 20, you know, if it even closed down here tomorrow, I would get out, just take that small loss. But I like that you have a V2 in the value zone. That's good, but just make sure you watch that loss. You watch that level. Nice trade back here, everybody. On the 24th with this V2, it looks like it has moved up nicely from then. MACD, RSI was over 50, MACD was positive. Price did not close above the fractal. That's okay because you had a V2. Still in the trade on the 22nd. 723, which was yesterday, you phased out of 2/3 of your position. That's good. Today, I got out of the full position under the 1 ATR. Better to wait till end of the day. Yeah, that's why, I'm an end of the day trader. But, in this particular trade, if this was Kerry Lavorne, he would take a third here, take a third here, take a third here. But that's just him. It doesn't mean that you have to do it that way. But regardless, this was a nice trade. FNAC Darty. And then I think you have one more. Oh, that's the one we just looked at. I do like this trade a lot. When you took it, you entered it on the 22nd. You had this beautiful V1. Also closed above the 200-day. I really like that. Yesterday, still in the trade, you phased out a third. That's fine. Today, still in the trade, you phased out another third. That's probably good. I don't know if it hit the 50 RSI and rejected it. If it did, I would probably exit the whole trade here, but I can't tell from your chart whether it rejected the 50. But nice trades, nice setup. Really like that. There is not a MACD divergence here, Frederick. Here you have a low, here you have a lower low. You see how these bars are just as deep as these? That is not a divergence. These bars would have to be very shallow to show it's running at a momentum. So, maybe we need to work on talking about MACD divergences a little bit more, because this is not a MACD divergence here. Oh, that's just the one we talked about. And then last one, Frederick. You bought on the 19th here based upon this V1 and this closed under and closed back over the 200. Closed above fractal. No, there was no fractal that happened here. RSI under 50. Previous bar, big mesh. Yes. Still in the trade, phased out a third yesterday. Perfect. Still in the trade, did not close below the 20. Yeah, perfect. Phase out of another third if we get up here to the second ATR channel. But if it closes under 50, closes under the 20, I would get out. But fantastic trades, Frederick. Really, really proud of you, man. And I like how you make notes. I like how you have a plan. I mean, this is all good stuff. This is all good stuff. JT says, I sell on a cross of the 34 SMA, B8 EMA crossing. Okay, so yeah, that's just JT's preference, is using an 8 EMA crossing a 34 EMA. There's a lot of different moving average combinations that you guys can use, and what really matters, everybody, is that you can back test them on etfreplay.com to make sure they work, but it doesn't matter what your approach is, as long as it's just an approach with good trading principles. But again, I say it, I know I'm a broken record. It does not matter how you phase out, what you do to the upside, if you only trail or you phase out to the upside. What matters is that when you're wrong, you get out. That's what matters. You're welcome, Frederick. All right, everybody. Well, it is 2:30 my time, so I am going to go hit the trails. So anyway, we had a profitable day today. I am happy for that. And yeah, so go out, do something nice for somebody today. Study your charts, read your books. Think about what kind of trader I am. Do I want to phase out? Am I okay with holding on to open profits? Think about this stuff. It's important. Go through your charts and do something nice for somebody. I think I already said that. I'm not sure. So, all right, everybody. Hopefully we'll be here tomorrow during the last hour of the market, God willing. So I hope to see you then. If you have any other questions that you didn't ask today or forgot to ask today or didn't think of, feel free to send me an email or message on Twitter, and I'm happy to help you out. So, and if you haven't hit that thumbs up, please hit the thumbs up button. All right. Thanks, Johnny. I will have a good one. Thanks, William. Thanks, Merritt. My dog is jumping up. Okay. Frederick, you're welcome. And did I get everybody? JT, thank you. Frederick, Johnny, William, Murray, Johnny. I said Johnny twice. I'm glad you had a good month, man. And JT, I said that. And Dr. Jorgensen and Murray and Frank B. All right, everybody. Thanks for coming. Appreciate you spending your time with me. And hopefully to see you tomorrow during the last hour of the market. Take care now. Bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.